Thanks for tuning into India Market Close, and we are holding on to the gains. In fact, have just built on a little bit to that, but it's largely been this very strong market. The intraday of the Nifty will effectively show you that it's almost been a trending day, more so for the broader end of the spectrum, which Hersh will speak about. But it's been a nice, solid trending day today, with not too many gyrations on the downside, at least, not quite there. Mid caps and small caps have done even better, and we have these charts which show the value, and a small chart here intraday which will give you a sense of what the mid caps and the small caps have done, and I think those have been clear winners. So very strong gains out here for the Nifty mid cap 100 as well, and the small caps too have not done too badly. I'll bring up the heat map for the Nifty just to highlight what's happening on the Nifty 50, and a lot of green, very little red. Bharti Airtel is probably the one stock which has succumbed to some selling, but PSUs yet again, the top 4 out of the top 5 are PSU names, so pretty strong show there too. And lastly, just get the contributors list on the Nifty before Hersh speaks about the broader end of the spectrum. There is HDFC Bank, which has contributed the maximum pay of points, and L&T, NTPC, RIL. So no clear sectoral favor, if you will, but for PSUs which are doing well. And the losing side too, maybe an off day for Bharti, but otherwise it's largely been pretty stable. So almost nothing that can be complained, and all high beta has perked up in trade.
Well, yes, Niraj, you're right. And we've seen markets sustain, so that's one positive. But let's pull up some stocks counters and focus on the back of news and developments. Let me first pull out something like a Wockhardt QIP. That stock just about 1/3% higher, not much of a movement there, but the QIP coming through for Wockhardt. Now, among other stocks, let's pull up something like an RVNL, 2.5% higher already here, in fact. My apologies. But yeah, so new order wins continues for RVNL. Avenue Supermarts, we had a whole host of brokerages today, and we have lots of movers. Maybe on the back of brokerages, but also on the back of the positivity that's come through on the global cues in the morning. And Avenue Supermarts is probably one of those, 2.5% higher. CLSA initiating 5,100 being the target price. MGL also up roughly 3% on the back of brokerage. We also have the likes of a BSC, 2,800 is the target price ascribed to BSC, 10% higher in trade now, probably at the day's high as we speak. IOCL also 3.2% higher, positive brokerage notes. We have those notes coming through, especially with regard to OMCs, where there is some bit of value capture after this correction. That's what most brokerages seem to be suggesting. And that's the one on IOC as well. Last up, I want to talk about is IRB Infra. We'll speak about a lot of these counters on this show over the next hour or so with Niraj. But IRB Infra specifically, Kotak Institutional, upping its grading, upgrading it from reduce to an add. Target price 65 rupees, stock up and away, 7.5% higher.
Okay, so that's the key data when it comes to the top newsmakers. Let's actually get in the first initial thoughts on the show from Rajesh Palviya. He's SVP Technical and Derivatives Research at Axis Securities. Rajesh, great having you. Thanks for taking the time out. Has this surprised you, or did you anticipate this with this strength that is there in the markets today? And the back of this, what are the trading recommendations for the afternoon?
Good afternoon, Niraj. So post this gap up opening, follow-up buying action, that's the clear sign of again Street is now getting confidence back as broad-based buying action is happening across the board, like mid cap, small cap, as well as large cap. All the stocks are showing good traction in terms of buying. Though market has corrected towards the 50-day moving average for the Nifty, and briefly we have given a breakdown of that level also. And on the near-term basis, the indicators were in the oversold trajectory. So that's the pullback was anticipated, but the follow-up buying in mid-cap, small cap is really a surprising factor for the market, as most of the mid cap, small cap have given the breakdown of their near-term, short-term structure. So that recovery is again, giving some kind of, comfort. And again, I think if this continues furthermore for another day, so then possibly I think the broader market may likely to continue furthermore upside, and possibly Nifty may able to cross 22,100. That's the major call concentration area at this moment. So that level needs to watch on the Nifty. Once we crosses about 22,100, then I think that rally can scale up to the next target towards 22,300 kind of zone also. Most of the large cap stocks are now showing short covering action. So we believe that this rally can extend further, and one should remain on the long side. Those who have already bought at the lower level, now your stop loss should be trailed to higher side around 21,950 should be your stop loss on Nifty spot. Okay. Even on the bank Nifty.
Rajesh, sorry, just before we move there, and we'll give you a stock as well, but just quick derivative question. Talk of maximum OI yesterday, maximum OI on the call side was at 22,000. If we stay higher, is there a possibility of some covering leading the index to make a swift up move as well?
Yeah, still we are witnessing some short covering action for 22,000 call option in today's session also. So I think that covering is taking place. And if we stay above 22,000, yes, definitely that covering may lead to some further more, traction on the buying side. So that's the make or break level. Though we have a weekly expiry for this Nifty, so I think sometime we are going to spend around 22,000 level, and then if for Nifty spot, if we crosses 2250 now, then yes, possible short covering action we can see in last half an hour of trade also, and then possibly 22,100 kind of level also we can see in the today's session also. So that is very interesting level to watch for, as we are continuously holding about 22,000 level. Then there is a high possibility that we can see in last half an hour there is a short covering action could be there. So one should be ready with that move also. So it could be a sharp up move in Nifty also in the last half an hour of trade. For Bank Nifty, 47,000 is acting as a major supply zone at this moment. That major call concentration area is still not able to take out those levels. So for Bank Nifty, that level is very important and critical at this moment. So till that level is not taken out, some consolidation we can see in the range of 46,500 to 47,000. But some of the large cap banking stocks are showing traction. So I think sooner or later we may see a breakout above 47,000. Once that breakout happens, then possible Bank Nifty can also show good amount of rally towards 47,500. That's the next call concentration area. So at this moment for Bank Nifty also one can hold their position with stop loss of 46,500. Now on the stocks front, the first stock that we like in today's session, that is Oberoi Realty. Stock managed to give breakout of its multiple supply zone on daily chart, and now stock again managed to hold above its 50-day moving average. So and real estate stocks are also showing good short covering action. So that momentum we can see further higher in Oberoi Realty. So I think one can look to buy this stock for upside target of 1470. Stop loss should be at around 1400. Second stock is BHEL. Stock came out from its F&O ban period today itself, and the kind of momentum which we are seeing in most of the PSU stocks. So BHEL is also looking promising. Now stock is trading about a 20-day moving average. The kind of buying interest which we are seeing throughout the session, that clearly shows that BHEL can continue. Furthermore, upside 255 is the trading target for near-term perspective. One can buy this stock with stop loss of 230.
Okay, thank you for that, Rajesh. But in terms of where we are in where the street is placed, we've had a 750 plus point intraday rally in the Sensex, 1% rise in the Nifty as well. We're nearly 200 points higher as we speak. Market cap of all listed firms has hit 380 trillion rupees. What's aiding the rally? Is it global-led, domestic? Some perspective coming in from Mahima before we go across to and get some other views as well on this one. Mahima.
Right, Hersh. So as you rightly said, the equity investors did turn richer today by 6 trillion, and the benchmarks have risen over 1% in trade today. The market capitalization of all BSE listed entities has touched 380 trillion during the trade today. Now the S&P BSE Sensex jumped over 380 points and touched the level of 72,882, and Nifty 50 reclaimed the 22,000 mark. Now broader markets have outperformed the benchmark indices, where small cap 250 was up around 1.2%, mid cap 150 was up around 1.8%. Now, a few global factors that have been working in favor of this particular uptrend, where US Federal Reserve dovish policy, they held interest rates steady between 5.25 to 5.5%, and they still expect to reduce them by 0.75% by the end of 2024. And also global markets were up in trade. S&P 500 closed at record highs, around 0.89% higher. The Nasdaq Composite surged over 1.25%. The Dow Jones Industrial Average jumped over 1.03%, and these were the overall global cues that have worked in the favor. And lastly, heavyweights pulled the index up, include HDFC, L&T, RIL, which contributed around 60 points to the rally, and NTPC, Tata Steel, Tata Motors and BPCL were also up. Well, ICICI Direct said that 21,700 will be the support levels to watch out for.
Okay, thank you for that, Mahima. That's, of course, a piece on the fundamental side with regard to the rally itself. Niraj, if I can come to you with regard to this rally. Global cues leading the way, of course, today morning, but you think that this is now starting to look more sustainable? This new start, could this be a new start in your view?
Bit of a surprise from the FOMC, and that kind of removes one big hurdle or adds one tailwind as well, you could argue. So pretty interesting. I mean, it's difficult to make for a case for a sustained bounce in the small caps and the mid space because of valuations, but a lot of PSUs had fallen so badly that I think there is some bit of buying that's happening there. In fact, incidentally, Hersh, when we look at this PSU index today, yes, all stocks are in the green. So there is a bit of a bounce happening in everything, which is what we said in the trade setup today. A lot of policy/price-led things, right? MGL or a Gujarat Gas, etc., or the OMCs, which are beaten and out of shape. Can they come back with a bang? And look at that PSC index today. Okay, ONGC is now marginally in the green, but otherwise, all components in the green, and quite a stellar move out there in that space.
Yes. Rajesh, if I can come to you, I know BHEL is on your list, but outside of that, any other PSEs which look very interesting for you today?
Yeah, definitely. So, Hersh, we have already recommended CPSE ETF to all our clients in today's session also, and we are expecting that CPSE index can, give some bounce back. So, we believe that, this short covering action we can see in most of the PSU stock, like we have seen in power as well as in energy space. Most of the stocks are showing good short covering, and if Nifty held about 22,000 level, then yes, possible follow-up buying action we could see. So to play this pullback action in most of the PSE stock, I think CPSE ETF is the right way to take the buying position. I think one can buy CPSE ETF that is trading at around 78 rupees. Keep your stop loss at 75 rupees, and I think again there is a potential again to regain the all-time high trajectory going forward. We are projecting target of 84 to 85 for this up move which we are seeing in CPSE ETF.
Point taken. Thanks for that, Rajesh. Before we add more perspective with regard to how global markets, FOMC has played out on our markets today, host of stocks buzzing in trade on the back of volumes. Varsha joins in with a list of those.
Hi Hersh, so let's see which all are stocks which are buzzing on volume, starting with eMudra, wherein company has seen an intraday high of 18%. Volumes are over 7x 30-day average at 38 lakh equity shares. Recently they did win contracts of public key infra and management solution for a defense agency and e-signature platform orders for Middle East, South and West Africa. Then we have Praj Industries, which is buzzing on volumes with an intraday high of 3%. Now company's order book comprises of high margin profile orders. Company has leadership in domestic ethanol, and they are also focusing on newer technologies like second grade ethanol. Then we have Engineers India is in focus on high trading volume. Stock hits an intraday high of 12%. Order book as on Q3 FY24 stands at 4,700 crore. strong focus on international markets is what they are focusing on going forward. Also, they are looking for initiatives in the green energy sector as well. In last 1 year, company has given almost 160% to its investors. Lastly, we have signed wherein application has been filed by Infotech HAL Limited Bangalore, a 50-50 joint venture of Cyient Limited and HAL, wherein they have initiated a corporate insolvency resolution process. So these are the stocks which are buzzing on volumes as of today.
Thank you for that very quick roundup, Varsha, but time for a quick break. More on the other side. We'll be joined in by Richard Harris to talk to us about FOMC outcome, how markets are going to respond, all of those. We'll be right back.
Back with India market close, and you can't take your eyes off the markets because of what the Fed has done. Now it's important to dissect this through the day, and let's take the opinion from Richard Harris. He's Chief Executive at Port Shelter Investment Management. He joins us on the FOMC decision and the impact on emerging markets, including India. Richard, did it take you by surprise? Good morning or good afternoon, as the case. Good morning to you in London. Did this take you by...
good afternoon. I'm in Hong Kong.
You are in Hong Kong. Okay, good afternoon.
Right.
Okay, good evening maybe. Does this take you by surprise? And are you constructive on EMs as a result of what the Fed has announced?
Well, I don't think it was a great surprise. In fact, the Fed has done very little. If you look at where the dot plots have gone, the dot plots sort of moved away when everyone was worried about recession, moved downwards, and now they've moved back up again. So basically, interest rate expectations are pretty well where they were, 9 months ago, something like that. So there's been much to do about nothing in the meantime. I think in terms of EMs, it's rather more complex. I mean, India, of course, has had a fantastic performance in the last sort of year or so. China's had a terrible performance in the last year or so. So I don't think you can bucket them all into one space. My guess at the moment is that India's maybe having a bit of a rest from the rises that we've seen elsewhere that have affected other markets. And China is almost certainly turned the bottom, but is having a very slow recovery. In the meantime, the US market keeps going on and on. So I think the Fed is probably unbiased more worried about inflation at the moment than recession.
I take your point, Richard. Hersh also joining in. I want to try and understand from you where you see India in terms of its valuations. You did mention that the returns have been good. But currently, given the macro setup, how are valuations looking to you?
Well, it's valuations are very difficult at the moment because markets have continued to move on, and prices have got more expensive. So I think investors, certainly if you're looking at being a foreign investor in India, you're slightly less worried about valuations as to how the market looks in the future. India at the moment looks fairly healthy. I think what's pushed a lot of the other markets on has been the whole AI bubble. And I don't think India has necessarily participated in that yet. That may come down the line, certainly in terms of software development and that sort of thing. But the AI bubble has certainly pushed the US market ahead quite substantially, and also seen some movements in Europe as well. And those are the two markets over the last quarter that have done particularly well. So I think in terms of valuations, it's difficult to say anything's cheap or expensive at the moment. Markets are really moving on the narrative. And the current big narrative, of course, is AI.
Sure, Richard. And Richard, just to try and get perspective here, right? We've seen interest rates, especially, and if I can refer to the US 10-year maybe as a benchmark, creep up from that 1.5% kind of number a couple of years back all the way now closer to 4.5%. We've seen rate hikes which are pretty much unprecedented over the last 15 years at least. How do you reconcile that with how markets have behaved and performed?
I think there's one word, and that's liquidity. There's a lot of liquidity still sloshing around the US market, the European markets, because of all the government largesse over the last few years. You know, we saw the big money inflow because of COVID. The consumer's pretty buoyant, the consumer's pretty confident, and as a result, that's leading to good earnings in companies, and that's pushing markets up as well. Then you have other issues. As I said, AI is a positive issue, and a number of these factors coming through. So we are in a bit of a conundrum at the moment, but the key thing is that the market seems to think that people can pay those higher interest rates. After all, they're not that high, and money has to cost something. And money has been at 0% for a long time. So 4%, I think, isn't too much to pay. And at the moment, the market seems to think that people can pay that.
Got it. Okay, Richard, appreciate you taking the time out and joining us. Thanks for giving us your opinion, and have a good evening.
Thank you. Bye-bye.
Right. Bye-bye. That's the view from Richard Harris from Hong Kong, and talking about the impact of FOMC on India. And, well, you know, most markets have seen that uptick. The pocket that has done extremely well for itself is metals. You have to admit that today, just suddenly, the risk on mood has helped the Nifty metal index in a big way. Stocks are up between 4, 5, 7%, and some very strong up moves seen, and sustained moves, if you will. Even Hindustan Copper is up, and NMDC, which saw a downgrade from Citi, has also not done as badly. Now, Rajesh, metals have flattered to deceive and have gotten sold at multiple spikes thus far. Is this time looking different, or would you be skeptical on the rally?
Yeah, I think, Niraj, this time I think possibly we can see a breakout in most of the metal stock for this pullback. Though still the consolidation range is still there for most of the metal stocks. So I think some of the metal stocks which are almost on a verge of giving breakout of consolidation. So our preferred choice from that space would be Tata Steel. That is also looking very interesting in this last corrective move. Stock almost taken support from its 50-day moving average trajectory, and we have seen a very strong pullback from those levels. So I think Tata Steel already managed to hold its previous breakout level, which was happened at around 140 kind of level. So that level is looking as a good important support area at this moment, and we believe that once a stock crosses above 154, then possible upside we can see towards 165 to 170 also on the Tata Steel on a positional basis. The other stock that we like at this juncture is Jindal Steel and Power. That stock is also looking promising, and almost now stock is approaching towards its previous swing high that was at around 835 kind of zone. So I think another 2% kind of up move from the current level would give a breakout of this consolidation range, and then possible upside target we can project towards 860 to 870. So Jindal Steel and Power is another stock where one can look to buy with stop loss of 805.
Okay, thank you, Rajesh. Quick break again. We'll stay tuned with our stop buy sell ideas, as well as we'll go into specific stocks, take views from our experts on those as well. Stay tuned. Okay, welcome back. You're watching India Market Close here on NDTV Profit. You know, one of the stocks which was really buzzing in trade, or which is really buzzing in trade today, is BSE, which is Bombay Stock Exchange. Quickly looking at, what brokerages have come out and spoken about this one. 11% higher, Niraj, on this. We're seeing sustained positivity on this one, at least as of now. What we are getting to understand rather is that BSE continues to witness strong traction with regard to where equity derivative volumes is concerned. So that continues to be a strong point for the BSE. Upgrade to a buy by Investec. Target price is 2,800, so another maybe 25-30% upside plus still in the stock after the 10% that it's done today. With regard to margins and OPEX, they are expecting that margins OPEX will come in much better going forward. There will be stability there. There was a one-off in Q3, 91 odd crore. They believe that that would be a one-off. Of course, management commentary in Q4 will be awaited on that particular count, but largely expected to be a one-off. And expecting earnings compounding of 40 to 45% from FY24 to FY26. So very bullish in terms of the commentary. But before I go to guests and take their views on BSE in particular, I want to try and break down the FNOQs for today. Agam is standing by as always with regard to what the futures and options data is suggesting. Agam, take it away.
Well, quite an active thesis of what we saw yesterday. Yesterday, the markets were extremely choppy. Today, that's been a very, very quiet, steady consolidation coming through for the benchmarks. The Nifty specifically, once again, the focus is on the weekly options too. It opened around 22,000, and that's exactly where we are likely to see these particular set of options expire. And we are seeing unwinding coming through as far as index futures go as well. The Nifty Bank, again, we're starting to see some amount of traction as far as an up move goes. And remember that a lot of this has to do with short covering, considering we've seen the Bank Nifty come off. In fact, the longest losing streak for the Bank Nifty in 20 years, even though the correction has not been as steep, we are still seeing it stay above the mark of 46,500, and that, of course, is the big positive, though unwinding coming in as far as the OI goes as well. But in terms of how things are panning out in the options market, and as I was suggesting, it was the 22,000 level that was in focus, and that's exactly where we're likely to see a lot more traction in terms of your overall open interest as well. There you have it. Most amount of calls and puts being concentrated here. Moving on to stocks, let's keep an eye on a handful of them. So we do have longs in L&T, Tata Steel, SAIL, SRF, Siemens, all of them advancing, all of them seeing a good amount of increase in open interest as well. And among stocks which are seeing unwinding, let's pull that list up as well, where we are seeing short covering, in fact, for Glenmark Pharma, PVR, HAL, Indus Tower, as well as BPCL. And if you notice, in both the lists, we have advances coming in. So it does seem like the broader markets are finally starting to see some traction towards the upside.
Well, thanks for that, Agam. And interesting that what we're seeing in some of those PSU names as we discussed. Rajesh, very quick view. I gave a PSC idea. Hersh asked you about PSUs as well. And I'm going to third that with a question on oil marketing companies. The last 2 days have certainly seen some serious pullback. What happens next?
So after a significant corrective move, all three OMC companies are, showing good traction in terms of buying. If you talk about BPCL, stock almost took support from its 50-day moving average and very strong pullback action in today's session. Looking at the data, short covering is clearly there. Stock now managed to give breakout of last 3 days, falling supply pressure. So I think if stock continues to hold now above 580, 578 kind of zone, then yes, possible follow-up buying action we can see towards 605 to 610. That's the next level on the higher side for BPCL. So I think those who've already bought at lower level, they can hold down the position with stop loss of 578. If we talk about HPCL, again, the same kind of behavior, strong pullback action. Still looking at the structure for HPCL in Petro, we expect that, if it's hold above 465 level, then possible pullback can continue towards 485 to 490. So here also our advice would be to hold on, as already these two stocks are recovering from their oversold trajectory on the near-term structure, and we believe that furthermore short covering can take this stock further higher. Another 2 to 3% kind of up move we can see in this continuation of this pullback.
Okay, thank you for that, Rajesh. Let me also welcome on board Nischal Maheshwari, CEO Institutional Equities at Centrum. Nischal, welcome to NDTV Profit. Good afternoon. Talk to us about what you make of the setup early today with regard to how global cues have flown and the kind of impact it's had. Do you now sense that we could be in a space where we could go higher where markets are concerned?
Hi, afternoon. Thank you for having me. So I think one significant thing has happened yesterday in the FOMC meet, and I think Fed governor is very clear, basically, that he's reiterated that there will be rate cuts, and at least they are still guiding for 3 rate cuts. If you go through the details, one interesting thing which they highlighted is that Fed is now keen to do rate cuts, and they have said that even if there is, if the hiring is strong, that cannot be a deterrent for us basically to cut rates. If you really, I think this is a very big policy change which Fed has announced, because if you remember earlier, every time Fed has been saying this was one of the things that the unemployment rate is still benign at 3.5, 3.6%, which is the long-term average for the US. And the hiring and the wage hikes have been pretty strong. So they were not sure actually whether this is going to be, or it will allow them to do rate cuts. So I think that's one change, basically a big change across the world. And I think across the world, the markets have been up. And this is setting up the whole market again for possible rate cuts, even in India by June. And I think a positive outlook on the market.
Nischal, Niraj here. Good afternoon. Did I hear you say June? You anticipate June?
Afternoon, Niraj. Yeah, looks like basically. I think June can be the first one basically where Fed is going to cut. And I think soon RBI is going to follow. And I think the world will follow basically. So I think June could be a very possible time.
Change the investment dynamics in any fashion? Because until about 2 weeks ago or for the last 3 or 4 weeks, not until 2 weeks, last 3 or 4 weeks, the conversation has been avoid small caps, avoid mid caps. There is a bit of a risk off at the table. Does yesterday's commentary and possible June action, as you said, change the dynamics for risk assets in India, particularly at the broader end at all?
No, I don't think so. Basically, that changes anything because I think that is a different call, basically, where you were saying that you were uncomfortable with the valuation of the mid cap and the small cap. That doesn't change anything because, yes, the mid cap and small cap, is there froth there? There is definitely froth there and should be avoided. Yes. So, yes, you should continue to hold on to your stocks, and further investment should be largely into large caps, basically, because they are looking pretty interesting at these prices. And if the risk on is there, I think a better way to invest would be into the large caps now.
Okay, Nischal, what have you liked? I know you liked some very interesting thematic notes, which we will do at a separate show because it requires time. But if I were to ask you today about what is top of the pile in an otherwise cautious broader end of the spectrum scenario for Centrum currently, what is it that you would be recommending?
So I think one theme which I've been recommending for some time, and it's as yet to play out, and or some of it is already played out and it will continue to play out, is the interest rate cut scenario, basically, because that's the most definite thing which is happening across the world. Now, I think quite a bit of that is already played out. You've seen autos going up. You've seen other rate sensitive sectors doing well. But I think there are two sectors as yet, basically, which should continue to do well or do further well from here. One is IT. I think definitely once the rate cut starts happening in the US, I think IT will be one of the biggest beneficiary as far as global cues are concerned. And domestically, I think banking has still not played its part as yet. So I think interest rate cut here domestically will definitely help the banks. So I think these two sectors can still be looked at favorably.
Right, Nischal. Now, with regard to the financial sector, one sector that's also looking, maybe at least today we had a couple of notes coming in with regard to Bajaj Finance as well. Any picks within the NBFC lending pack which you seem to like at this point, given that something like a Bajaj Finance is trading at probably a decadal low in terms of its valuations?
So we do not cover Bajaj, but I think our top pick in the NBFC space, there are several of them basically, but I think Shriram Finance looks very interesting to us. I think valuation is very attractive. Growth is very good. Asset quality is benign. So Shriram looks very interesting to us. We have been positive for a long time on Shriram. We continue to remain there. Other ones are basically the smaller housing finance companies, the 10 lakh, 12 lakh kind of a ticket size. So there, I think Aptus looks very interesting. Home First looks very interesting. So I think there is a whole gamut of plays basically which can which look interesting at these prices.
Okay, and what about banking? Do you like the larger private sector banks, which are again trading at their decadal lows, or you're preferring to see value in the PSUs, or would it be small mid-tier banks? How would you play the banking theme?
So I think large caps are still looking pretty good. Basically, I think valuation-wise, HDFC not gone anywhere, done nothing basically with the almost last 1 year post its merger. So I think that is a very safe bet. But SBI, yes, I think that looks very interesting at these prices again. So I think large cap, these two stocks look good. I think in the mid caps, you have RBL, which is looking pretty interesting.
Okay, and Nischal, specifically on HDFC, right? There's a wide view that growth will have to taper. Is that at all a concern for you? So even though EPS may continue to go up, the taper in growth, is that a concern? Maybe some amount of market share given away?
No, I don't think so, basically, because it's a pretty large play. And secondly, today between HDFC and SBI, they almost make whatever 20-25% of the market share. So I think that way they define the market. So if they are growing and at this size, basically they would be growing they would grow equivalent to the market, and I think that's a very comforting factor. So if they are not losing market share, till they are not losing market share and profitability remains strong, I don't see any reason to be worried about HDFC.
Okay. Nischal, just wanted a quick opinion today, so we got it from you. Thank you so much for taking the time out and being with us. But I look forward to do a slightly extended conversation with you in the morning sometime where we talk about one of the thematics that you guys write.
Definitely. Thank you.
Thank you for your time. Okay, so that's the view. And well, banks, financials, the interesting thing is today, for example, Bajaj Finance has seen two notes which have come out, one from BNP Paribas and one from Bank BofA Securities, both of which seem to be a bit constructive. The stock hasn't rallied too much, but it's certainly bounced off from the lows of 62, 6,300 and has inched up higher from there. Rajesh, quick thoughts on Bajaj Finance from a trade perspective?
So I think Niraj, stock is facing a challenge at around 6,800, 6,820. That's the major supply zone at this moment for this pullback. I think if it's able to cross those levels, 6,825, then yes, this rally can extend towards 7,000 kind of zone also. Even if you look at the weekly structure, since last 3-4 weeks, stock is trying to make a bottom of this decline, and 6825 breakout will confirm this bottom formation, and then possible rally can extend. So I think those who have already long in the trade, they can hold on the position with stop loss of 6620.
Okay. Point well noted. Okay, now a stock, stay on Rajesh, a stock in focus. And I'm sure, Rajesh, you would love to hear this as well, because Anushi, my colleagues Anushi and Hersh have done some interesting work on IRB Infra. That's a stock that's done really well today. Now, guys, what do you have for us today?
Well, thanks for that, Niraj. Let me first start off by giving you the peg. Well, Kotak is super bullish on IRB Infra. They've upgraded it from a reduce to an add. So that's first, but we'll try to delve deeper into it, try to understand what IRB Infra exactly does. It's the largest private roads and highways company. It builds it as well as operates it. So it does operation and management as well as building of the highway itself. It currently has a portfolio of 15,444 kilometers in terms of lane kilometers of road portfolio across 12 states of India. So it is by far the largest when it comes to this particular business. Now let me flip this around. Let me take it forward. It works under 3 models, and if you would have come across any road developer, these are the 3 models typically that they operate in. One is the build, operate, transfer model, where the road is built and operated by the infra developer, and then it is transferred to the government. The other one is the toll operate transfer, where the project is transferred to the infra developer like an IRB, and thereafter IRB operates it for the tolling period and it's transferred back to the government. And the third one is the HAM model, which is the hybrid annuity model, where the government gives certain grants to the toll and the operator of, as well as the constructor of the infrastructure project, and thereafter also on an annual basis continues to pay the operator and developer a certain fee before it is transferred back. So these are the three models. Let's quickly pull up what IRB does in general. One is that it has the one big positive rather in the current setup is that the toll price is linked to inflation and the concession period to the traffic, and that gives IRB a little bit of a leg up. More on that, of course, is when we'll come to the Kotak note and try and analyze what it says. Now, 4 business verticals. One is the concessions themselves, what IRB does. Second is it has a private InvIT platform where certain of their assets are transferred to an InvIT, some divestiture basically, which they've done to raise money. Third is a public InvIT platform, very similar, but a separate set of assets, of course. And fourth is EPC, where they do the construction as well as the operation and management. So mainly, most of the direct revenue comes from 1 and 4. 2 and 3, it's indirect revenue through some amount of divestiture which they've done. But let's try and look at the numbers. I'll pass that on to Anushi.
Right. So Hersh gave a pretty clear picture on what the company does and how the background of the company is. But let's move on to what kind of market cap the company covers. About 35,000 crore of a market cap over here. But how has the company performed over the course of last 4-5 years? Just look at the trajectory. Now, if you have to look at the revenue trend over here, 6,800 crore in FY20, which has more or less remained in a similar range. No particular CAGR growth that we are seeing about FY23, 6,400 crore. But now, FY24 onwards, we are seeing a significant pickup over here, about 20% of an upside. So revenue remains in check. But if you have to move to the EBITDA and the EBITDA margins over here, EBITDA, again, a similar trend that we are following, about more or less the 2,900 numbers, shifting to about 35,000 crore of range, while the EBITDA margins remain in the 45% to 50% of a range over here. While this is also due to the pickup of the construction cost, we are saying there you go, about 50.4% in FY23 compared to about 43.4% in FY20. So quite a significant upside. But FY24, we are again seeing a dip led by the increase in construction costs we are seeing. Now, last is the profit trend. Profit trend about 71 crores. Now, this again, because of the COVID period, because of the toll collections and all, we saw a dip in FY21 and 22, which has now gathered pace in 23 onwards again. And we are seeing some pickup over here. Now, moving on to the recent news, and which is the main focal point for the Kotak's rating that we are seeing, Sinatra is about to acquire about 24% stake in IRB's private InvIT. This is also owned by Ferrovial, which remains in focus. So, if you have to look at the valuation at which Sinatra has backed at, so that stands about 40,700 crore. So this they are buying from GIC, which holds about 49% stake. So in which IRB holds about 51% stake. So that stands at about 20,400 crore. So if this is to be compared with what Kotak's valuation was at about 14,400 crore, at which they have priced it at rupees 34 per share, a kind of high premium that we are looking at, through which Kotak has now adjusted its estimates for the company going forward and has given this an add rating compared to the sell rating it had earlier. Again, more reasons for this growth. Projections are also the NHAI strong pipeline of about 15 projects that stands at about 44,400 crore. So in the next 2 years also, IRB stands as a key beneficiary for this, with its net debt to EBITDA at pretty comfortable levels also, if you have to look at. So accounting for this, we are seeing the adjusted traffic estimates being raised by 1 to 7% over the course of FY24 to 26 period. So these are overall the key highlights as to which Kotak is bullish on IRB going forward and has upgraded its rating.
Fantastic work, both of you. Thanks so much for giving us the details of what IRB is, what are the numbers like, and why is it that one brokerage is up today. In fact, the stock is up because of that brokerage note, and therefore need to put that into perspective as well. Rajesh, after a while, actually, it's had this sporadic burst, but after a while, the kind of both price and volume action together that we're seeing in IRB infra, and please correct me if I'm wrong, does this look strong for more?
So Niraj, long-term structure for stock is in the bullish side only. Since last couple of months, some profit taking is happening, but still stock is holding the ground on the higher side, and long-term structure seems to be on the bullish side. I think yes, the kind of volume action and the price behavior which we are seeing in today's session, that clearly shows that yes, if possible, stock manages to cross above 60, 62 kind of level, then possible really we can see towards 70 even stock may have potential to again regain to its all-time high trajectory also. So I think one should hold the position even in the decline. One can add the position as long-term structure is bullish. Your stop loss should be at around 53 rupees. On the higher side, you can add more positions once stock crosses above 62. Then possible target we can see towards 70 to 75 in very short period of time.
Okay. Okay, closing strategies first before we take some other stock ideas, because a lot of stocks are buzzing. But Praj, Inox Wind, there's a clutch of names out there on the renewable side which are doing well. But closing strategies first. Rajesh, what is the stock that you're recommending as a BTST or an STBT?
Yeah, so BTST would be our choice, and Polycab is looking very promising. Stock managed to give breakout of its multiple supply zone. The kind of addition which we are seeing on the data, that clearly shows that this stock can now scale up to the next target towards 5150 to 5200 kind of zone. So Polycab one can look to buy at this moment with stop loss of 4970. The other stock that we like is Cummins India. Stock is enjoying its all-time high trajectory. There is a continuation of uptrend is taking place. Despite of this volatile market, stock managed to hold its previous breakout level, and now again, after a 4-week consolidation, stock is breaking out that range. So Cummins India is another buy where we can see a target towards 2960 to 2980. Keep your stop loss at around 2870.
Cummins saw a brokerage upgrade today. HSBC upped the target to 3,300 if I'm not wrong. The stock started off about a couple of percentage points and then went up even higher. So good going there. We will also try and pull up the views from Dheeraj Agarwal of Ambit. But set of stocks which are doing well today in the last couple of days maybe are some of the renewables. So Rajesh, just quick thoughts here. After having some very erratic days, Inox Wind is up 5%. Praj was up 10% yesterday, up another 3% today. We're probably seeing some traction in the likes of Suzlon, Patel, etc. as well. Any thoughts here on any of these names?
So I think Niraj, most of the renewable energy stocks are showing good traction. CG Power is now trading at all-time high trajectory. I think that stock is looking promising. We can see a target towards 600, 620 kind of zone. A very strong breakout is happening in the stock, and one can hold their long position in CG Power with the stop loss of 520. Again, SW Solar is also looking promising, though stock is locked at 5%. So I think after this corrective, I think move now stock is showing buying in today's session. So I think whole sector is again shown good traction in today's session. So I think a possible up move can be there in all these stock. SW Solar again, Inox Wind is again locked at 5%. So I think these 3 stocks can be looked at this current level, and possible momentum can extend further in coming trading sessions. So CG Power, one can initiate trade at the stock is still available, not logged. So I think this is the only stock where we feel that one can initiate buy for positional perspective.
And the other one buzzing today, Rajesh, is BSE. I didn't get a chance to take your view on this one. Any views at all?
Yeah, a very strong pullback in the stock. Stock was moving in, falling channel on daily chart in last couple of weeks, and looking at the bounce in today's session, that is again, breakout of this falling channel. So I think this breakout can extend. This breakout can take stock further higher. I think next target we can see towards 2400. That's the previous swing high kind of level for the stock. Overall, long-term structure is bullish since last 2-3 months. Stock is consolidating in a range, but looking at the bounce in today's session, that clearly shows that I think going forward, stock may manage to give breakout of this consolidation of last 3 months. Immediate target we are expecting towards 2400. Those who have already long in the stock can hold the position with stop loss of 2180.
And there are some bulk deals that have happened today. So Max Estates, of course, has seen some very high volumes and some price action, but 3.5%, nothing dramatic, but up about 3.5%. So watch out for that. E-Mudra is up 11%. Anu Pharma is up about 17%. And Engineers India as well as Sobha have done well, double-digit gains for both of those. Some very strong price volume action in a company called Sangvi Movers, which spoke to NDTV Profit yesterday. So watch out for some of those as well. Pretty strong showing. Amber has come back from the fall yesterday or day before and is up about 5% as well. So some very, very strong price volume action seen in select stocks. You know, real estate has done so well today after getting cleaned out the last few days, and Sobha stands out. I think it's closing in at the day's highs, if I'm not wrong. Nifty Realty too, kind of there, and Sobha too, almost there. So that's the other point to keep in mind. Okay, more voices. We spoke to Ambit Investment Managers Niraj Agarwal, who explained why he is bullish on pharma. Hear him out.
The reduction in fuel prices by 2 rupees came at just the time that after a prolonged period of softness, the crude and product prices both internationally have started to actually rise up again. So to that extent, obviously the marketing margins, for retail fuel certainly are likely to see a downward pressure for the next couple of months. Our core assumption, of course, remains that, given the timing of the cut, we would not really build in any fuel price increases till the election is over.
Well, that one, Niraj Agarwal, not Prabal Sen, but Niraj Agarwal on his views. Let me quickly take it back to Rajesh. Rajesh, with regard to some of these auto anch plays, something like a Sona Comstar, which is doing very well in trade today, 6.6% higher. How are you looking at this one on charts now? We've seen it come off from those lows quite sharply. And if not this, any other auto anch plays that you seem to like at this point?
So Hersh, yes, Sona Comstar is looking attractive. Stock is moving in a upsloping channel on a weekly chart that clearly shows that there is sustained buying action is taking place. Series of higher top, higher bottom formation in the stock. Stock is holding about to its 20-day, 50-day moving average. So strength is there on the near-term structure. So we believe that till stock is holding above 650, one should remain on the long side of trade, and possible once stock crosses above 700, 720 kind of zone, then we can see a good amount of rally towards 800 plus kind of target in the stock. So overall structure for short to medium term perspective is also looking bullish for Sona Com. So I think one should hold on the position. Your stop loss should be placed at around 650.
All right, Rajesh, much appreciate your time and your insights this afternoon. Thanks for being with us today and have a great evening. We're about very close for the markets to wrap, and let's just pull up how we are shutting shop today. Pretty strong moves there on the index. Bring up the Nifty 50. We're closing in at the high point or around the high point of the day. Maybe not the high point, but certainly a very high point, if you will, if not the highest point. The market breadth should come up on your screen because, frankly, yes, the Nifty is done well, but the real story is beyond that. And look at that, it's been such a rock solid market breadth day. Typically happens when you have a positive trigger from the global side after having a slightly difficult day the previous 1 or 2 days. So very strong market breadth as well. The Nifty contributors will come up, and you will probably see HDFC Bank right up there still. And that set of stocks hasn't changed too much. But before Hersh takes over, I just want to mark what are the top movers on the Nifty 500 or NSE 500. Again on the gainers and losers list, and just to give you a synopsis of what it looked like. Now, this is the sectoral indices, and we know that power, real estate, etc. has done well. But if we just get what has done well and what has not, look at that. The top loser is Metro Brands, just 3% lower. But the top gainers, EIL, Sobha, double-digit gains for a clutch of names. IRB Infra, something that Hersh and Anushi spoke about, up 9%. In fact, it's closing in close to the day's highs. And stocks like Intellect Design Arena as well have come back and done really well for itself. So while copper prices may be doing what they are doing, Hindustan Copper has certainly come back on account of what has happened to base metals by and large. Hersh, over to you.
Well, thanks, Niraj. Quick flash on the bottom of your screen that I want to highlight. SBI has filed a compliance affidavit in the electoral bonds case. This is, of course, breaking as we speak. SBI has submitted all details linked to electoral bonds, including alphanumeric numbers. They have now gone ahead and complied with what the Supreme Court has been pushing them to do, it seems. And the Election Commission is expected to release data of the electoral bonds shortly. So all of that coming through as we speak. And as markets close, we're very close to close now. And there you go. Markets have closed around 0.8% higher, at least on the Nifty 50 benchmark. The Sensex too up almost 600 points in trade today. So it's a positive day of trade, to say the very least, Niraj. Quickly pulling out broader markets and where we are seeing a bulk of the action, 2.5% higher on the Nifty mid cap. The Nifty small cap as well, up a solid 2.3%, closing off the day. Let me also quickly pull up the advanced decline to see the breadth and to check the breadth. It's quite a strong breadth as we see it, 1661 to 353. Maybe we were a bit higher earlier in trade. The breadth was a bit stronger. We've slightly tapered towards the end, but it's not a bad day at all by any stretch of measure. But it's a solid day of trade that we close. We'll see you tomorrow morning. Niraj, myself, everyone who puts the show together, thanks so much for watching. See you tomorrow.